If you run a discretionary trust and you have not signed your distribution minutes by 30 June, the ATO can tax 100% of the trust's taxable income at up to 47%. That is the top marginal rate hitting the trustee instead of your beneficiaries, usually lower rates, and it can cost tens of thousands in a single year. This is not a new law, but it is a hard annual deadline, and we are right on top of it. The ATO is clear. A resolution making beneficiaries entitled to trust income is only effective if it is made by the end of the income year, which is 30 June. Some deeds even require an earlier date, like 28 June, so the deed wins. Here is the mechanism. Normally, you spread trust income across beneficiaries on lower rates, like a low-income spouse or adult kids. But if there is no valid resolution, by 30 June, the ATO assesses the whole lot to the trustee at up to 47%, the top marginal rate, including the Medicare levy, according to multiple professional summaries from 2024 to 2026. Take a trust with $200,000 of taxable income, spread across two beneficiaries on an average rate around 34.5%. That is roughly $69,000 in tax. Taxed entirely to the trustee at 47%, it is about $94,000. That is around $25,000 of extra tax purely from missing valid minutes by 30 June on these modelled figures. 47%. That is the maximum marginal rate that can apply to all of a trust's taxable income when no valid distribution resolution is made by 30 June. It is the single sharpest reason this date matters more than almost any other on your calendar. Here is the detail most people get wrong. You do not have to wait for final accounts. The ATO confirms a resolution is effective even without an exact dollar amount, provided beneficiaries are made presently entitled by 30 June. So your accountant can use percentages, thresholds, or a cascading formula now and refine the exact figures later when the return is prepared. 3 moves. Fast. 1. Dig out your latest executed trust deed and confirm the deadline, because some deeds demand an earlier date than 30th June. 2. Ask your accountant to draft a resolution using current year estimates, percentages, or a cascading formula so you are not stuck waiting on final numbers. 3. Hold the trustee meeting and make sure everyone signs and dates the minute on or before 30 June. Then store it with your records. 30. June is the wall, and there is no extension. Resolutions made after this date are not valid for tax purposes, and if you are streaming franked dividends, that specific entitlement must also be recorded in writing by 30 June per the ATO. After 30 June, watch the streaming deadlines. For capital gains, the ATO allows specific entitlement to be recorded in writing within 2 months of year end, so by 31st August. Franked dividends, though, are locked at 30 June, and with the ATO's heightened focus on backdated resolutions in Section 100A, contemporaneous signing genuinely matters. The Trust Minutes deadline is one of those quiet rules that costs families a fortune when it slips. Subscribe to the fine print and we will keep you across every deadline like this one, in plain English, before it bites. Talk to your accountant this week, not in July.